Hey guys, it's Mandy Gatlin with Be Passionate and Prosper, and I'm just about to run my dogs to the park today, but I thought that I would tune in and answer a question that I had somebody ask me recently about their finances, and I thought this would be a great opportunity to share some of that information. So this person asked me, they wanted to know, is it better to pay off a big debt, like a loan on a car, with their child's savings account? Like, should they have money in savings and be putting money towards savings every month, or should they be paying off their debts? And this is not an easy question to answer because everyone is different, but I'm going to tell you from my own experience, having gone through many different scenarios through the years and navigating through my finances and finally figuring out the best way to deal with finances. I'm going to give you my answer first, and then I'm going to tell you why it may be difficult for people to make this decision. So, what I say about this, based on my experience, is that you should get comfortable with financing and being patient with paying down debt. I know there are a lot of financial gurus out there who talk about, pay everything off. And I do think that that's important. That's an important mindset to have, to not allow yourself to get really far into debt. But at the same time, in order to build up your savings, which if you read my blogs or if you watch my other videos, I always say pay yourself first, save first. If you're paying off your debt completely, then sometimes there's nothing left at the end of the day for savings. So what I found was mixing by paying down debt a little bit at a time with focused effort, and making sure that the very first thing that I did was saving. So setting up a savings account, and then once that built up enough, set up an investment account by making sure that you are automatically saving every single month, and you agree in your mind that you're not ever going to touch that money, that you are going to build up that account so that that's your retire early account. The reason that I say that is because most people that I talk to, they don't want to work their entire lives. In fact, if you're watching this video or reading the blog, then most likely you are of the camp that you want to retire early. You want financial independence. And I will guarantee you will not get there by continually paying off loans and debts and doing that first all the time. That is just my experience. And in fact, many of the people that I work with personally, that I do coaching with, I see this in relationships. It actually causes quite a bit of trouble in relationships because one person is of the camp of, it's something that I want to do. It's making me too nervous. I need to pay it all off. This debt has to be gone. And the other person is more of the camp of, wait a second, we set up this savings account specifically for a purpose, and now you're using that to pay off this loan. And then promises get made about, yeah, well, if we pay off this loan, I promise we're going to go back and we're going to refund that savings account. And then it never happens because some other expense pops up and creeps up. And then, so really what I think happens when you're doing that, when you're paying loan after loan, what happens is you're never really becoming fully aware of your money. You're never really taking charge of, your spending habits. And you're never really prioritizing for yourself and your family what's most important. And if you're here, if you're visiting this video, then I'm going to say for you to start saying to yourself and to your family that our main priority is to retire early, okay, to reach financial independence. So put that out there as something that you know that you want, and that is your main top goal. Once you've claimed that, every action that you do must align with that concept. So if your thing is, I want to retire early, I want financial independence, then when something comes up, like something to spend money on, you have to stop and ask yourself, does this align with our main goal? And it won't. I mean, so it will generally just automatically help you in terms of your spending, so that you can assess whether, this new fancy car that you're thinking of buying, does that really fit in with my concept of retiring early? Now, if it doesn't, but you still need a car, then you have to compromise or negotiate or figure out a way. And sometimes that might mean that you take that savings, that hefty savings that you're able to do each month so you can retire early, and you lower it just a little bit so that it provides you with a monthly payment that you can make towards that loan. Okay? The reason that you want to keep saving and you want to start with saving every month and you want to let it build and you don't want to touch it is because of compounding. And if you don't understand compounding, I'll put a link below so that you guys can kind of understand that a little bit more. But basically, it's when your money is multiplying over many, many years, and it just keeps adding upon itself. Okay, that's like the simple description to give to you guys. But it's just that concept of your money's multiplying, and it actually grows faster because of compounding. It only works if you allow it to happen over time and you don't touch your money. So you see, if you're pulling out your money, then you start that process all over again. And it's kind of like defeating the purpose then of saving. So I wanted to just give you guys my take on that. I think you can see that, and I may not be right. It may not be the right decision for you. And I want to go into that now. The reason it may not be right for you is because money is a very emotional thing. It creates a lot of emotion in people. If you have that, I would suggest that you get some coaching on that and really work through your money mindset and deal with things like scarcity and lack. Because if you can learn that, if you can learn how to, get through those fears, worries, and doubts with money, then you'll be able to create some really powerful things in your life and really get a good hold of your money and start building it. But if you really just don't have the time to do that, if you don't have the time to work on your money mindset, and you know that you're the type that money keeps me up at night, I don't like having a huge loan hanging over my head, then you might be of the camp of, I need to pay that off. Okay, so that's why I'm saying this answer varies depending on the people that I talk to. Generally, if they come to work with me, I'm going to suggest to them, hey, let's take a few sessions to work on money mindset and get you to a place where you start understanding what this concept of lack and scarcity is and what it's doing to you and how it's affecting your decisions with money. If they don't have that amount of time to work with me, then we try to put the numbers all out on a spreadsheet so that they can see very clearly like what is the best decision for them, and so that they feel emotionally comfortable with it. Because you, at the end of the day, this is about your happiness. And, regardless of what I say or what any guru out there says, you have to come back to your own self and kind of ask yourself, what is the most important thing for me here? Now, I will tell you that this is a very important thing to address if it's causing problems in your marriage, with your spouse, or, with your mate, in your family. If it's causing problems because you keep kind of getting worried and going into that lax state and then wanting to pay off a loan when the other people are going, wait a second, like we had a plan here, then I would suggest for you to work with someone like me, a coach, a money mindset person, or start really paying attention to your fears and how they are affecting your own abilities with money. So just by bringing awareness sometimes to the situation, it can actually heal your troubles and your problems. And sometimes also just putting things down on paper. That's why I always go back to the basics. A lot of people I hear these days are like, don't do a budget, and that will never work for people. And I'm like, how could you not have a budget? How could you not, put your expenses down on paper and really see it month to month and understand how much you're spending month to month? So if you're not doing that, then I would highly suggest that as a first step. I have a 7-day free Master Your Money challenge, and I give away all of these wonderful worksheets and freebies and links to help you every step of the way in that process. So I will also put those down below. But I just wanted to share that with you guys because it was a question that came up. And in the end, my answer to that question about, should we take this money from savings to pay off a debt or a loan, I would say no. I would tell you, keep your savings and create a plan for paying down your debt. And there are tactics and tools and ways of doing that. The best way I would say to kind of give you a really quick tip would be to try to find a very low interest credit card or very low interest loan. Get a loan from a family member or a friend if you know you're going to pay them back. If you're not, then do it on a credit card, or get one of these 0% interest cards. Know that when you transfer money to those cards, they charge you a fee for that. So I have many blogs that can help with all of that. I will try to post as many of them as I can down below for you guys. But that would be my quick tip. It would be to think of your money in terms of like, this is all a long-term thing. Your money, your life, this is a journey. This is not like a one-time, fix it quick. I'm putting away all my debts in one night. That's it. I have no more money worries. That's not the case with money. I guarantee you that if you are trying to fix a problem like that, like paying off a loan really quickly, it's like instant gratification to pay it off with your savings. Then you are fixing it temporarily and you are not fixing your main issue. So really consider that when you are, taking that money from your savings. Consider that you're now starting back at square one to zero. Your whole concept, your whole goal of retiring early has completely been blown apart. So think of those things before you just go for that instant gratification. Okay, so that was also some really great advice from my dad from it's my stepdad, gave me really good advice through the years, and I listened. When it came to things like paying off our mortgage, should I pay it off early? Should I not? He was always of the camp of just keep paying it every month. You can pay a little bit extra if you really can afford it, but consider how much your money can work for you if you invest it. The interest rate is higher when you are making more interest off of the market. You can actually make more in the stock market. So you have to look at a bunch of different things when you're considering what's the best decision here with your money. So I hope that this helped some of you guys out. If you have questions about your specific situation, definitely post them below. Because if you're having that question, most likely hundreds upon thousands of other people are having the same problem. And I'd be happy to give you my take on it to help you succeed. And so go ahead and post below. If you haven't already, please subscribe to this channel and allow it to be something that you just watch here and there to get yourself some wisdom, some knowledge about money. And I'm sending you guys lots of great energy, and I hope that you have great success with your finances. And I'm all about helping you guys attain your goals and to retire early. All right, so thanks so much for watching. Again, I'm Mandy Gatlin, and I have a dog who's staring me down. I'm gonna take them to the park. So bye, you guys. See you next time.